So is Lyft going to get to the public markets before Uber?
That seems to be the plan. I mean, it's an interesting strategic question if you're the smaller company. You know, Lyft was last valued at $15.1 billion. Uber is this $76 billion company. You know, people hoping for this sort of, generational sort of $100 billion something IPO. So if you're the smaller company, what do you do? And what we're reporting is that their strategic choice seems to be, let's get out ahead of Uber.
Why does that strategy to them make sense?
Well, it means that you probably have more options with bankers. Like, there's this risk that if Uber does this huge IPO, even if you're not the lead bank or the second bank, you might still work with Uber and therefore be conflicted out of working with Lyft later. It also just means there's more capital available. If people haven't already picked a horse, they might sort of jump on and invest in Lyft.
On the other hand, there are risks, right, to being first.
Right. Well, one, people could just hold their horses and wait for Uber. People don't know how to measure you. It's hard to know whether it's to your advantage or disadvantage to be measured against the competition, and you're just a smaller IPO. But it seems like the advantages are leaning more to going first. And sort of getting some attention of its own instead of being sort of an afterthought to Uber's huge IPO.
So Lyft has had a CFO for a while. Uber just hired a CFO. Could Uber speed up and get there first?
That would be a big surprise. I think even sort of late 2019 is going to be a lot of work for Uber. I mean, when we spoke with their CFO, former Merrill Lynch banker, Nelson Chai, he wasn't even willing to commit to that timing until he looked at the books. Now, I spoke with Dara Khosrowshahi, the CEO, later, who was like, we're still on track. I like being public, blah, blah, blah. But, that's going to take it's a heavy lift, I guess, to get the late 2019 IPO for Uber. And like you said, Lyft has had a CFO, and I think has had a lot of its key executives in place.
So let's compare the balance sheets and what we know. I mean, you've reported detailed numbers on Uber's financials. Does that compare to what we're seeing at Lyft?
Well, I'm almost scared because we know so much more about Uber's financials because they've been disclosing them quarterly. So we get a very good sense of their billions of dollars of losses, but they've been pretty transparent about it. Lyft is more like your standard sort of private unicorn and is happily keeping its numbers private. So it's been a while since we've got an update. Obviously, they've kept raising money, so they have plenty of cash, but we don't know exactly how much cash on hand or I think what second quarter finainin were.
Right, or whether they're losing at the scale that Uber is losing at. I mean, certainly they don't have as much coming in, but, in terms of...
Yeah, I mean, historically relative to revenue, their losses have been pretty big, even compared to Uber. But again, we don't know where things are at the moment. And the U.S. should be sort of a more profitable market than, if you're investing all over the world as Uber is. Uber's competing in India with Ola. Lyft doesn't have that problem. But at the same time, Lyft is spending to gain or hold market share against Uber. So we really don't know. And they've started investing in their own autonomous vehicle research program. So, we could be surprised.
And also doesn't have the international opportunity at this point. Okay.